Hey everyone, welcome back to CryptoCache. Thank you again so much for joining me here. Hope you're having an amazing day and enjoying the slaughter here with Bitcoin. I think there is, what, $5 to $6 billion in liquidation alone on Bitcoin itself on one exchange. Can you imagine the billions of dollars that spread across the market? 6, 7, 8 to 10% on average for retracement on most altcoins. So I'm glad that we held strong with our shorts. We took a nice short from Bitcoin a few days ago, 3 days ago, 54%. Solana, that was a trade we closed in profit, just tried to get out of it. A small 4%, of course, and then an AVAX short at 33% from yesterday. So again, good little trades here, fun, good stuff. Of course, it's easy to say it when you're on the right side of the tracks, but if you caught my video, the last few videos this week, you'll know that we've been expecting the pullback. I was anticipating or hoping for an entry around the 60,000 mark, and come to find out that's not even looking very tantalizing at all anymore. Okay, in fact, this Elliott wave here is invalidated. We can look at larger term potential reality, but at this point, there isn't really much here. Okay, so again, all the more reason not to focus on one theory. You do not trade specifically on that. While I think it's important to recognize fib levels and kind of work within those, you shouldn't just base your whole entire analysis on, again, just one theory. So just kind of throwing it out there because we got a lot of community members over here from MCO, and they some of them have a unilateral perception on how that works, because again, that's exactly what it is. All you're looking at is one thing. It's good to diversify. So let's go ahead and do that. Let's take a look at liquidation for Bitcoin, kind of see what's going on. With liquidation though, folks, it's getting pretty interesting. The easy way to understand it is that majority of all liquidation to the downside has been swept. I talked about, the $62,000 mark yesterday that got taken care of overnight. This morning and so far today, we can see 58K was that strong wick all the way down, sweeping majority of liquidation. It's interesting how liquidation occurs at exactly round numbers. Like, look at that. It's like 57,950. Basically, you could say 58K. And if we take a look at the macro, we can recognize too, 65,000 is this heavy concentration of shorts there. So basically that double top. We shorted from 64,250, if I'm not mistaken, and essentially, secured majority profit already on that trade. So awesome stuff. But once more, when you see liquidation levels, it doesn't always mean the price is going to go that direction. It just implies that this kind of got a target on its back. So now that we've swept this lower level, there is potential for the price to recover back up to 65K. But this also could be, more of a macro move here, and we could very well see lower price points. I really hope and pray that we see low 50K again. Again, I got some really heavy limit orders, basically one Bitcoin for every 1,000 starting at 55K down. Because again, I just want to kind of accumulate as much as I can while we still can. So I think this is going to be one of the few times we're going to be able to see this. I hope I'm wrong, and the price continues super high, or just in general maybe continues lower. We get more dollar cost average targets. But simply put, with liquidation, 55K, 54K, those are some of the next heavier concentrations. And if we zoom in a little bit, 57.5 is the next bigger area. So easy way to understand it. 57.5 is the next level, and then 55 and 54 below that. Okay, so again, those are just areas of common retracement. And we take a look at retracement here. We see our local low. We basically retested that 57.5 mark, really close to it. So what we're going to need to do here is kind of calibrate. We're going to go ahead and extend our fibs out a little bit further so we can kind of see, because that was based on that previous wave. But in general, this is a more local low and the local high. So we kind of want to focus on that and see. If we close today at about 59.5 or higher, that could spell potential recovery. But again, it's way too early to tell. We don't jump into a trade at this point. When you see these kind of volume candles, you avoid it like the plague. Again, I'm just sitting back, cruising my car, just like watching the charts and be like, man, this is crazy stuff, because I had to run some errands earlier. That's why I'm a little late in this video. And when I was seeing all this stuff happen, it's kind of funny. I'm just really happy that while we're in some trades, we're not super heavy on, leverage for starters, and we closed all of our longs earlier today. I closed I think it was this morning. We closed our ETH long at a small loss at somewhere in the range of 2,700, 2,650. Thank God we did. I mean, take a look at this here. This ETH candle is terrible. Okay, so again, it's okay to have longs or shorts in different directions, of course, but just be careful. And when you see the market starting to build this kind of storm, you want to make sure that you're prepared and ready for it, which we have been. So again, congrats to our community members for that. Let's look at the daily time frame, simple moving averages. We're now below all of them, which oddly enough, we started today's trading day above the 50 and the 20. Those are usually good, solid support ranges. Now, our better case scenario is that 60,500 is a new resistance. Okay, Again, that's based on the 20-day SMA. That's not a foolproof scenario there, but just know that previous support ranges can work as new resistance ranges. We can see here as well, we lost 50 on the RSI, at least we are losing it. We're 10 minutes away from today's candlestick closing. I think it's safe to say that we are going to lose 50 on the RSI. And what that basically just means is that we're back in bear town, okay? Stochastic swinging down, MACD is diverging pretty significant. There's no reason to consider a long position with confidence right now. Now, the 4 hour and the hourly might tell us a different story, but I know the charts by now, they're going to be screaming bearish divergence, and there's no reason to take a long. Now, do you jump into a short position in this situation here? Statistically, you're going to find more benefit doing so. However, it depends on how you do it and what kind of trade you're taking. From a swing trader's perspective, you avoid it, again, like the plague. But at this point here, you know, for maybe a scalp of some sort, you can definitely manage that. However, we take a look here, we're in the sweet spot, sort of, for a nice little bounce. In other words, when you're right there at 30 on the RSI and money flow index is just below 20, generally speaking, we're going to see some kind of slight recovery, right? But if you zoom in, of course, it's already kind of recovered and it's probably too late, okay? But the truth is, since we're under 30 on the RSI, that's generally speaking a bad sign, and telling us basically that we're more likely to see further downside. Again, the inverse applies too. If you've seen my videos, you'll know that once you pass 70, that threshold to the upside, you steer clear and you do not consider securing profits until the price comes back down. In this case here, do not consider securing profits on your short until the price comes back up. And I misspeak on that a lot. It's not the price, it's the actual RSI coming back up. If the price recovers, that's a different story. Anyways, the whole point of this is that we're below every single moving average. We're significant bearish divergence. There's no reason to consider a long position. Hourly time frame, same thing as well. We're going to see the Ichimoku cloud screaming bearish divergence. Again, zero reason to consider a trade. We do take a look, though, at some important factors here. Again, a lot of times you'll see a bearish backtest of the ascending trend. That window of opportunity is gone. But what we are looking for here is key support levels. And what we can do with that is basically just kind of zoom out and then look at some macro points of control and kind of just see where we're at here with this type of scenario here. Again, no surprise, 64,000 is that key resistance. We witnessed that recently. Secondary to that, 67,000, we know that. And then tertiary to that is 61,000, basically just round down to say 61,000 even. In other words, that's the third most relevant area of volume in this scenario here. And if you look, there's not a ton of volume in the 55 to 60K range. So we're kind of in this uncharted territory. So a lot of price discovery occurs when you're in those zones. So my speculation here is that we are probably due to continue further down. What we could do here, of course, is pull up some macro fibs. In fact, I'll post this on our playout chart just to give you guys some perspective, guys and gals, of where we're at here in the overall sentiment. But we did reject off this 0.618 fib level, pretty significant there at 64K. And if we zoom in a little bit with our support, we have support at 58.5, and then next to that is about 55K. Those are concurrent in a lot of ways with the liquidation levels here, okay? So again, I'll go ahead and post this for you guys on our Twitter, Telegram, and Discord. It looks a little something like this if you're not familiar, and you can kind of get some indications of what I'm thinking too. I generally like to post trade alerts as well to my community, and that is found here in our Discord under trade alerts, and we also have this function in our Telegram too. You can link your account through our Connect Accounts page on the website. I don't think I missed anything. If I did, let me know. But at this point, nothing too significant. Let's double check here. I'm curious if there is any kind of gap, which there is. We want to pay attention to this too. This is the CME gap. Because again, price moves so fast that this gap opened, and we want to kind of keep a close eye on this guy here, okay? So we're going to look at that. The gap is at 60,500, upwards of about 62,000. I'm rounding up a little bit. 62K as low as 60.5. So just know that exists. So that could be somewhat of a relief rally. Price comes up there and then maybe continues lower, right? So what we definitely want to pay attention to is this descending trend and kind of see where we're at with that. Once more, I'll post this again later so you can kind of see it and I'll clean it up. But those are things we're going to pay attention to moving forward, okay? Because they are relevant and they're concurrent in a lot of ways with the liquidation levels. It's kind of a form of liquidation, generally a fair value gap of some sort, which I think I forgot to take a look at. Let's see, there's probably going to be some fair value here. Let's double check. Oh, it's not going to identify that until the candlestick closes. We'll, again, circle back to this in the morning. Thanks again so much for watching, folks. I hope you learned something today. I look forward to seeing you in the next one. Have a great rest of your day. Take care.